Hello everyone, this is an initiative for those who have cleared their mains exam with optional as Commerce and Accountancy and are yet to give interviews. So these are some important topics and questions for the commerce background candidate, and in this video we'll be brushing up some of the concepts that are required for a commerce background UPSC interview. Certain points that have to be kept in mind before attempting any of the questions is the fact that the person who's asking, the board member or maybe the chairman, are not really subject experts. So try and concentrate on the areas that you feel are important for a layman too, or as an aspirant are important for you. For example, commerce as a subject also has finance. When we're talking about finance, we can also look into the constitutional provisions which deal with the state and the center finances. So that can be one way of doing things. Other than that, this video would give you a very brief and a very quick understanding as to what are the keywords that you need to remember while giving an answer, because it should look as if you are a commerce background aspirant, and therefore this video will help you to revise and brush up those concepts. So without further ado, let's start. I'll be taking 10 questions of that topic. For example, today's topic is accounting. Then I'll be taking some of the general questions related to accounting and some of the technical questions. So now we'll brush up the concepts of accounting. Accounting is the art of recording, classifying and summarizing, that is RCS, economic information, transactions and events in terms of money, that is monetary, quantitative. Therefore, and then what do? We interpret the results. So in layman terms, we record, classify and summarize the economic information, money, transactions, and then interpret the results. What are the functions of accounting? Very simply, identifying, recording and classifying. While we identify, we use vouchers. Vouchers are of different type. They are a documentary evidence for any transaction that has taken place. Now the words that I am writing, it is recommended that you speak these words while you are giving answers to the board. So and recording, we do recording in the journal, we classify them in the ledger, and such accounts that have been classified are then used to prepare financial statements. What are the financial statements? The profit and loss account, balance sheet and cash flow statement. These statements give a true and fair view of the organization as a whole. Such information, when presented through the financial statements, is communicated to different users. Now, the users of the accounting information can be the management itself, the potential investors, the current stakeholders that include the shareholders of the company, the debtors of the company, the creditors of the company, the employees of the company, government officials. Such are the users. Now, what are the objectives of accounting? Very quickly, it helps to keep a systematic and complete record. So record maintenance is one of the objectives. Then it helps to ascertain the profit. So profit ascertainment is the other objective. Then to ascertain the financial position in terms of whether firm is doing well, in terms of the ROE that it is earning, return on equity, ROI, return on investment. So all these terms have been elaborated in the next few sections. Then it also provides useful accounting information to this we've already covered here while we were talking about the different users. Then it helps the management in decision making. So this is about the information utility of the accounts, and this is about the decision making. It also prevents frauds such as Satyam scandal and the Enron scandal. Now this will be covered in the subsequent sections. Advantages, we can actually use the objectives to enlist the advantages of accounting, that is the information that it provides for making economic decision. Comparison is one of the major advantages, and for comparison we use intra-firm comparison and inter-firm comparison. Then it also provides information about the financial positions. This we've already covered, keeps systematic and complete record, and it also helps in assessment of the correct tax liabilities. Now, one thing that we have to keep in mind here is that the businesses do not operate in isolation. Therefore, when we are talking about the business, we also talk about the government, the rule of law, and therefore the system. So the system also helps us to determine the tax liabilities, the subsidies that the business is eligible for, and also the kind of credit worthiness that the business has. Now this is one of the aspects that can be covered in cost accounting, in the sense that when we know the cost of one such product, we can find its selling price by adding a profit margin. This also helps in transfer pricing. Now, the limitations of accounting is majorly that it is historical in nature and it is not dynamic, so to say, since the accounts are prepared on 31st March, as on 30, we always write XYZ Limited Company accounts as on 31st March 2021. This is the financial year ending. So since the accounts are prepared at the end of the financial year, hence these are historical in nature. The one of the other limitations is that it is quantitative in nature and not qualitative. Therefore, major changes in qualitative terms like the efficiency of the management or the staff quality or customer satisfaction is not highlighted when we are dealing with accounting. It also is also affected by window dressing in terms of the accounting principles that one can use. One always has a chance to window dress, in the sense show a better position than is. So it is also not free from personal bias and personal judgment of the people making the account. Then it is based on various concepts and conventions which do not have the realistic financial application in terms of the business that they are operating on. Also, these concepts and conventions are not rigid per se, and therefore they can be manipulated, and there are loopholes that can be exploited. So such are the limitations. One is that it is historical, the other it's not qualitative. Then window dressing chances are there, biases can be crept in, concepts and conventions are not that rigid and can be manipulated easily. Now we move on to the questions which can be asked from this topic in the interview. So the first question we will be dealing with is the explanation of the basic terms of debit credit, the rules of debit credit. Somewhat we will be dealing with the history. So debit credit is basically the plus and minus, the same thing that happens in maths. This is to represent debit and this is to represent credit in accountancy. So debits and credits are used in companies' bookkeeping in order for its books to balance. So here we will be dealing with the double entry bookkeeping system. This I'll be dealing with in the next question. Now what we have to take care of is that in maths, plus means always addition and minus means always subtraction, but this is not the case with accounts. So there are two approaches for the rules of debit and credit. One is the traditional approach and the other is the modern approach. And while we write debit, we can use the term of DR, and when we write credit, we can use CR. So now we will be dealing with the two approaches. In traditional approach, we basically classify accounts into two, personal and impersonal. In personal accounts, we use natural persons for any Ram, Sham, etc., any other natural human being. Then we use the artificial person for any corporate entity, for example, Reliance XYZ Limited. And then we use the representative person. These are not actually person, but these represent some kind of a person, natural person. For example, capital, this represents owner and outstanding salary is to be given to an employee. Now for impersonal accounts, we have two, real accounts and nominal accounts. Real accounts are tangible and intangible, the assets that we have, and nominal accounts are the expense, losses and incomes and gains. So here we are talking about the assets and liabilities. Liabilities is basically dealt with the personal accounts, and in the nominal accounts we basically deal with revenues and expenditures. In traditional approaches we have three different types of rules. Now, what are the rules? Debit what comes into the business and credit what goes out from the business. That is, debit what comes in, credit what goes out in terms of the real account. Then for personal account, we have debit the receiver, credit the giver. For nominal account, we have debit the expenses and credit the incomes. Now, this is the traditional approach. For modern approach, we use when we are talking about assets and then when we are talking about liabilities. Any increase in assets is always debited and any decrease in assets is always credited. Any increase in liabilities is always credited and any decrease in liabilities is always debited. This holds true for any of the expenses that we are talking about and any of the revenues that we talk about. So this is elaborated here. Now we have to answer the question that why debit was called Debre and why credit was called Credre, and hence they have been shortened into DR and CR. So there is one author, Venetian author, that is Luca Pacioli, or in his work in 15th century, his book was about arithmetic geometry, proportions and proportionality. Just remember this word Pacioli. So he first time described the double entry bookkeeping, and there he used the Latin words debre and credere. Debre means to owe something and credere means to entrust something. That means I am giving you something and you owe me something. So this has been shortened in English to DR for debit and CR for credit. So this answers our three questions, that is this one and this one. After the above three questions, we'll be taking these 7 questions and that will make the total to 10. What is the difference between bookkeeping, accounting and accountancy? So bookkeeping is a process of identifying, measuring and recording transactions. So this is basically record based function, and then accounting is a wider concept. So if this is bookkeeping, then accounting is a superset of bookkeeping. So accounting is wider in the sense that it begins where bookkeeping ends. So once we have recorded the transactions, we have to interpret the results and then communicate the results. So interpretation, presentation, communication entails accounting. Then accountancy is the systematic knowledge of principles and techniques. So this is the study based concept in the terms of the discipline that it is. So bookkeeping is a record management function. Accounting is a wider concept which entails interpretation, presentation and communication of the financial transactions, and accountancy is a discipline. So what is the difference between bookkeeping and accounting? Bookkeeping, this we have already defined, and then accounting should include summarizing, interpreting and communicating the financial results. What are the objectives? This maintains systematic records and this ascertains the profitability of corporate entity. Then this is the primary stage and this is the second stage. It begins where the bookkeeping ends. What is the nature of the job? It is routine and repetitive, and this is analytical. Therefore, the skill required in this job is of primary in nature, and then the skill required is analytical in nature. So now we deal with the double entry system of bookkeeping. Double entry system of bookkeeping is based on the dual aspect concept. So dual aspect means that every transaction has two aspects, that is debit and credit. These debit and credits are recorded in different accounts. So every debit has equal amount of credit and total of all debits must be equal to the total of credits. So when asked what is double entry system of bookkeeping, we will first say that it is based on the dual aspect. That means debit and credit of each transaction is recorded. Then every debit has an equal amount of credit. All the total of debits and all the total of credits should be equal. So these are 3 points. Now we will be distinguishing between the double entry system and the single entry system. So here we've dealt with the dual aspect principle, debit credit we have dealt, and this recognizes and records both the aspects. This we've dealt with. In single entry system, both the aspects are not recorded and only one aspect is recorded. For example, if I have a creditor, namely X, I have given him money to repay my debt, then the money outflow will be recorded, but the creditor will not be debited with the same amount. So what are the advantages of double entry system? Firstly, it is scientific. It presents a complete record. It checks the arithmetical accuracy of the accounts, and it also helps to determine the profit and loss, thereby helping in decision making. So this can be said to have a more scientific basis and accurate built-in system of checks and balances. So this means that if there is an error, that can be corrected at the stage of recording itself. We've covered this concept, bookkeeping, accounting and accountancy. We've covered single entry system and double entry system. We'll now deal with the double accounting system. So what is double accounting system? The double account system is used to present the annual financial accounts of public utilities, for example, railways, electricity, gas, water supply, etc. So, since these are usually incorporated under special acts, therefore, their accounts are prepared in the format that is specified by the special statute. These public utilities are run by government or local authorities. So one thing that has to be noticed here is that these undertakings are capital intensive, and when one has to judge whether they are running efficiently, they have to basically see what is the return on capital employed, ROCE. So for that, the aim is not to show the financial position at a particular date, but to disclose how the capital is being raised and how it is applied in terms of the acquisition of different assets. Therefore, two accounts are prepared. One is receipts and expenditure on capital account. This is very important. And the other one is the general balance sheet. Now, what are the differences in terms of the double account system that is prepared for public utilities and the commercial establishments which prepare their balance sheets according to the Companies Act? So there are a number of differences. For example, the fixed assets and fixed long-term liabilities are recorded in the receipts and capital are recorded in the receipts and expenditure on capital account. Depreciation is not deducted from the asset and it is shown as a liability by way of fund, and the fixed assets are recorded at book value. Now this has both pros and cons. If depreciation is shown separately, then the asset can be replaced without using the liquid funds of the company, and the con is that this asset won't be reflected at its true value. The financial statements are sometimes misleading. Then what happens is that any other kind of reserve and fund, that is sinking fund, depreciation fund, general reserve fund, are shown as liabilities at the side of general balance. Since these public undertakings are heavily subsidized by the government in terms of the exemptions that has been given of and the budget financing, the government needs to know whether the capital invested in such securities is yielding results, and therefore it is a very good presentation when it comes to formulating statistics for government appraisal. But when it comes to comparison with commercial entities and for the purpose of tax ascertainment, then such double accounting systems is bound to create confusions. So, double accounting systems have their own pros and cons, and the cost benefit analysis for opting for such double accounts is to be considered by the government and incorporated accordingly in the special statute. Having completed the double accounting system, we will be dealing with the system of accounting of government, why government cannot adopt the double entry system, which department is proceeding towards double entry system recently, and what is municipal accounting. Apart from this, we'll be also dealing with the government accounts and government budget. So we'll be dealing with the fiscal governance and government accounts aspect. Here, first define what is government accounting, which is synonymous to the accounting that we've earlier defined: collecting, classifying, recording, summarizing, interpreting all the financial transactions of the government offices, information about revenues, expenditure, deposits and loans, and cash availability. This is the objective, so as to find the information. So now what is the difference between the government and commercial accounting? Firstly, government accounting deals with the financial activities of the government, whereas commercial accounting maintains record of the trading and manufacturing of goods and services. Data entry system in government accounting system is single entry system. For commercial accounting, we have double entry system. What is the basis of accounting statements? That is again the single entry system, and it is the cash basis. Here we use the double entry system and the accrual basis. So this aspect has been answered, that what is the system of accounting in government use? It is the single entry system and it is cash basis. Why it is used is the next topic that we'll be dealing with later. First, we have to understand some important terms and expressions. Demand for grant. Demand for grant is any public authority that requests for money to incur its expenditure from the government is called demand for grant. Supplementary grant is something that has to be sanctioned before the end of financial year, and if the budget is inadequate or due to some unforeseen expenditure, supplementary grant is offered. Then there are some expenses which are votable and some expenses that are not votable in nature. Votable expenses are expenses for which parliamentary approval is required. No non-votable expenditure is charged for the consolidated fund of India or the public account so as to maintain its independence. Appropriation is once the government passes the budget, appropriation bill is introduced, and then it becomes an appropriation act when finally passed in the Lok Sabha and Rajya Sabha. Then the money can be withdrawn from Consolidated Fund of India to meet the grants. Then vote on account when it is an election year or the government doesn't have the time to place the full budget in the parliament and an interim budget is posted, a certain proportion of the expenditure or the grant is allowed. There are three types of government funds. Here we can see in the picture. One is the consolidated fund, the contingency fund, and the public accounts fund. Consolidated fund is dealt with in the Article 266 of the Indian Constitution, and all the tax and non-tax revenues then belongs to the Consolidated Fund of India. In the Contingency Fund of India, this is kept separately for the unforeseen expenditure. All the expenditure of the government is incurred from this fund and no amount can be withdrawn from this fund without the authorization of Parliament. But in the contingency fund, this is held on behalf of the president by the secretary. So for some unforeseen expenditure, when the parliament is not in session and there is an emergent need, then the president can withdraw money from the contingency fund of India. Then the public account is also dealt with by Article 267. It says that when the government incurs a liability to pay the money or has received a claim to recover the amount paid, such amounts should be credited to the public accounts of India. And parliamentary authorization for the payments is not required. So this can basically be said to be the current account of the government that has been used in the common parlance when dealing with commercial entities. Now, compilation of accounts is done on a monthly basis by the treasuries and the other government departments. This then has to be sent to the Accountant General of India, who submits the entire compilation to the Comptroller and Auditor General of India. Now, who is this officer? The CAG is an independent constitutional body. His roles and duties and the appointment procedure has been enumerated in Article 148. In Article 150, there is one important provision that the accounts of the Union and States shall be kept in such form as the President may prescribe on the advice of Comptroller and Auditor General. Now, this is very important as far as the commerce background is concerned because the government accounting rules have been laid down by the CAG in 1990. And according to these rules, which have the modalities of how to regulate and maintain the accounts, this has been given in 1990 by the CAG. And such accounts, compiled accounts, have to be then audited by the CAG and such have to be submitted to the President, who shall cause them to be laid before each house of the Parliament. This has been given in Article 151. Which department is proceeding towards double entry system and what is municipal accounting and how it is done? So the answer to this question is the local governance department. That means the urban local bodies. So now we'll be dealing with the introduction of municipal accounting in India. The Constitution in its 74th Amendment 1992 defined the roles, powers and functions of the urban local bodies, and along with the devolution of powers, it also gave direction for reforms. In 2001, the Supreme Court of India, while hearing a public interest litigation, recognized the defects of the cash-based accounting that was previously being used in the ULBs, that is the urban local bodies, and directed the central government to develop guidelines for accrual based accounting. So In that regard, Ministry of Finance issued guidelines for the utilization of local body grant. In those guidelines, the CAG also prescribed formats for budgets and accounting policies and costing of utilities. Here, it suggested the introduction of an accrual based accounting system. Now, the Ministry of Urban Development then started preparing National Municipal Accounts Manual. Now, this is very important, NMAN. And for same, training manual was prepared and valuation manual was also prepared. Therefore, the central government then made it mandatory for each ULB to adopt a double entry system to receive various development funds. So with this, we complete the 10 technical questions relating to accounting. You can very well make 20-30 questions as you like from this content. For the next 10 questions, which will be on the general aspects of accounting, will be dealt in the next part. Please stay tuned for the same and do not forget to subscribe the channel, hit the bell icon and share and like. Thank you so much.